Let us look at Article 27, Paragraph 1 of the India-USA Treaty, where a person considers. Now, the use of the word a person indicates that even though the issue might be common, the application for MAP has to be made by the company. It cannot be by a group of people, right? So where an assessee, person, what is the meaning of person? You refer to the definition section of the treaty, or if the person is not defined there, you go as per the provision of the domestic laws. In India's case, it will be Income Tax Act 1961. So where a person considers that the action of one or both of the contracting states, right? Now, why is it that the word one or both has been used? One could be in a case where, let's say for example, a US person receives a fee for included services from India, okay, which he believes is not chargeable to tax in India. But the Indian tax authorities levy tax on such income. So it is the action of one contracting state, namely India, which is not in accordance with the provision of the convention, right? Extending this case only, even if India levies tax, the US tax resident goes to the US government and says, why don't you give me a credit for the taxes which have been withheld in India? But the US government says that, look, as per our rules or as per our interpretation, there were no taxes payable in India. The taxes should be paid to us. Now, in this case, it is the combined action of both India and the US government which is resulting for him in double taxation, because India has already taken the tax by way of withholding. US government is not giving a credit for this. So if a person considers that the action of one or both the contracting states result or will result, so this is a past action, so the assessment has happened, let's say for example, will result, let's say for example, for assessment year 2013-14, there's an order which is already passed against the taxpayer, right? Now the assessment is going on for 14-15, where the same order is expected to be again levied. In such a case, he can even file a MAP application for 14-15, right? In taxation, not in accordance with the provision of the convention. So basically, what is going to happen is the taxation that he is going to suffer, he should consider, he should have a belief that this is not in accordance with the provisions of the treaty. If he believes that the taxation is not as per the domestic laws, MAP cannot be invoked. He may. The use of the word may indicates that it's not compulsory for him to go for MAP. He can even follow the domestic law procedure, which could give him a right to appeal against any adverse tax orders that might be passed by the tax authorities. But if he chooses, he can also, irrespective of the remedies provided by the domestic laws of that state, even if he has a right to appeal, he may choose either to exercise it or not exercise it, but that would not hamper his right to file an application under MAP. Present his case to the competent authority of the contracting state of which he is a resident or a national. So the case has to be presented to the contracting state of which the person concerned is a resident. One point which you should note here is that this residential status needs to be seen for the year for which the taxation is not in accordance with the provision of this convention. So let's say if you are looking at 2014-15, the tax status for the person has to be seen for 14-15. So let's say in 2016-17, he files an application for MAP. Okay, this person was a US resident in 14-15. In 16-17, he becomes a resident of India. In such a case, even if he has to file a MAP application for 14-15, even though he's a resident of India in that year, the application will be filed to the US competent authority. The case must be presented within 3 years of the date of the receipt of the notice of the action which gives rise to taxation, not in accordance with the provision of this convention. This timeline may differ in different treaties, so you should watch out for that. But what it says is that let's say the assessment order is passed on a particular date, right? You receive the notice of the assessment order on, let's say for example, 1st April 2015. You have to file a MAP application within 3 years from the receipt of this notice. So what are some of the key characteristics? What is covered under person? You can make a reference to Article 3 or the IT Act if it is not defined in the treaty. Whose action can result in MAP? Actions of one or both the contracting state. Like I gave you the example of FTS being taxed wrongly. Okay. And second, if the FTS is taxed in one contracting state, the other state does not give a credit for the taxes, so withheld. What actions are covered? It could be past or future. What is the belief of the taxpayer? There has to be a belief that the taxation is not in accordance with the provision of the treaty.